Good morning and a very warm welcome to this, the fourth SRB Legal Conference, coming to you live from Brussels in the SRB building. My name is Susan Carroll and it's my pleasure to be your MC today. We've got a very exciting lineup and I will shortly hand over to our chair, Dominique Laboureix, to get us officially started. But before that, just a bit of information from me about our format and particularly how those of you joining us online can take part. As you've seen in our agenda, we have a keynote speech as well as 3 panel discussions, and we'll also have 1 short break and a lunch break. Towards the end of each panel, the moderator will invite you to ask questions or make comments. For those of you joining via WebEx, you can simply enter your question into the chat, and the moderators will come to you in due course. For those of you in the room with us, the old-fashioned method of raising your hand will work just fine. But please wait for our colleagues with the microphones to reach you so that those online can hear your question. And a final hint to all our speakers and moderators today, our event today is public and we are on the record. Now let's have an official welcome from SRB Chair Dominique Laboureix. Dominique, please.
Thank you, Susan. Ladies and gentlemen, esteemed guests and fellow speakers, it's my pleasure to welcome you today to the 4th edition of the SRB Legal Conference, held here at the headquarters of a Single Resolution Board in Brussels. Perhaps you've noted that we expect 28 degrees today in Brussels, so that's why you're here, -1 in this dark room. You will be listening to interesting things with fresh air conditions. I'm delighted to see so many distinguished experts from both the public and private sectors, as well as academia, gathered together to share their insights and experiences on the intricacies of the banking regulation in Europe and beyond, with a particular focus on the banking union and resolution frameworks. Over the years, this conference has established itself as an important event in the landscape of legal conferences in the EU, providing a unique platform for the exchange of ideas and best practices among private and public practitioners, academics and regulators. It's an illustration of the SRB's commitment to fostering a culture of cooperation and knowledge sharing that we're able to bring together such an impressive array of speakers and participants. I would like to extend a special welcome to you, Frank Elderson, Vice Chair of the Supervisory Board of the ECB. Frank is an old member of the plenary session of the Single Resolution Board some years ago, so he knows very well this meeting room, Frank. And I'm very, very pleased to see you again in this meeting room to deliver a keynote speech in a few minutes on the single market from a legal perspective. I also wish to express my gratitude to all the other panelists who will be participating in our 3 panels, representing a diverse range of perspectives from the industry, resolution authorities, prudential supervisors, regulators, academia, and the judiciary. This year's conference is titled Banking Crisis, Law, Policy and Practice, European and Global Perspectives. I think each term matters in reality. Our intention is to explore the complex interplay between regulation, its enforcement and crisis management in the banking union, but more globally with a focus on the legal challenges and solutions that arise in this context. Our panelists will delve into the available tools and powers at the disposal of relevant authorities, including the most intrusive measures, and examine how these can be effectively deployed to protect financial stability, which is the mission of the single resolution mechanism. Recent events about financial stability, including the banking turmoil in the US and Switzerland in 2023 and the latest market fluctuations day after day, have underscored the need for the SRB to be ready, to be prepared, to act swiftly and decisively in response to emerging crises. In these regards, our strategy, SRM Vision 2028, marks a significant shift towards operationalization, resolution testing, and crisis readiness. This approach is designed to ensure that we are equipped to fulfill our mandate and protect financial stability without relying on public funds, while also ensuring that our decisions are robust and withstand legal scrutiny. As you can imagine, each decision we take creates an immediate litigation case, so we need to be strong and robust in our decisions. We are acutely aware of the complexities posed by the diverse legal systems within the banking union and beyond. The SRB must navigate a multitude of legal frameworks, including 21 different national legal systems, as well as foreign legal systems relevant to our cross-border groups. This complexity underscores the need for careful planning, preparation, and cooperation among authorities. It's in this context that the three panels of today will try to provide some clarity to our audience, and I trust that today's discussion will contribute to better understanding of the issues at stake. Let me briefly take a look to these three panels. The first one will look at resolution operationalization, exploring the legal framework on deep dives, on-site inspections, dry runs. As said, we have embarked on a new chapter of our work, and in this regard, on-site inspections, deep dives, dry runs are cornerstones of our new strategy. By the way, we are extremely proud to announce that the SRB was one of the first authorities in the globe launching formal on-site inspections on resolution-related topics earlier this year. We started in reality very end of last year. We have started with two first on-site missions, and there's a third one which is in the making. So it means that we've started to, let's say, enter into a new territory. And obviously, this type of exercise certainly raises a number of legal questions stemming from example from the principles of proportionality and independence, or from the right of banks to be heard on decisions that may affect them. It's here crucial to emphasize that effective cooperation between authorities is essential. In the conduct of deep dives, for instance, the SRB collaborates closely with relevant national resolution authorities, with staff from authorities, national ones and SRB one, cooperating together as integral members of what we call internal resolution teams, ITs, corresponding to the GSTs in the supervisory world. Similarly, this collaborative approach is to be applied also for the on-site missions. So this, let's say, means that we need not only to cooperate with different authorities, but also between authorities. And I have already mentioned the European Central Bank. We need to cooperate with them when we launch such on-site deep dives or on-site missions. And we want to avoid unnecessary duplication of efforts and to present potentially undue burden to banks, obviously. This commitment to cooperation does not imply that the SRB will renounce to intrusiveness and holistic approach to challenge the bank's resolvability. This is the ultimate goal of these instruments. The second panel will focus on enforcement of in the EU financial services law, with all the questions around legal yardsticks, judicial scrutiny. And so here, again, let me come back to the strategy 2028 we've agreed upon here. We want at the SRM level to be ready when needed to use enforcement actions to remove impediments to resolvability. So for the specialist here, there's a subtle nuance between impediments and substantive impediments, and there's a specific legal framework for substantive impediments, which are, if I understand well, bigger than the solo impediments. So let's work on this notion and let's see how we can build on the experience of others. This is exactly the purpose of this panel, how we can rely on the valuable experience of other regulators, and to see if there is a sufficient legal background, obviously, and no shortage of important legal questions which would need to be addressed as soon as possible. So in this panel, you will certainly discuss the nature and scope of sanctioning powers, the proportionality, the fundamental rights considerations and their impact on the use of these sanctioning powers, the procedural rights and obligations during the administrative process leading to the imposition of sanctions, the judicial review of this exercise of sanctioning powers. So certainly a lot to say in this panel, and that's true that there is a tension here, because in an era where regulatory simplification is gaining traction everywhere, with policymakers seeking to reduce excessive burden on regulated entities and promote economic growth and competitivity, it may seem counterintuitive that our mission as regulators is becoming more complicated. Yet, the sheer complexity of EU financial services law, combined with the ever-present threat of legal challenges, means that our decisions shall be meticulous and well-reasoned to withstand judicial scrutiny. As we strive to apply the rules in a clear and consistent manner, the growing tension between simplicity and complexity is one that we must manage carefully. I will finish with a word on the third panel, Banking Crisis Management Frameworks, a Comparative Perspective, as we call this panel. So here it's about comparison, exploring banking crisis management frameworks around the globe. As you know, the FSB key attributes and more generally international standards serve as the departure point for all jurisdictions across the world. However, the transposition of these standards into specific pieces of legislation can be done in a different and scattered manner across the world. I'm very much looking forward to hearing from our speakers about the solutions which were found across the Channel, in Southeast Asia, in Brazil, and elsewhere. As I'm recently appointed chair of the FSB Resolution Steering Group, this is a topic which is very close to my heart. And I'm keenly aware of the importance of mutual understanding and cooperation among authorities in managing cross-border crises. Let me flag here that mutual understanding of each other's crisis management frameworks across the globe is of the utmost importance. Indeed, bank crises know no borders. And in the run-up to such crises, we need to be able to coordinate and cooperate trustfully with authorities across the world. Events like today, gathering all of us and promoting confidence and cooperation across authorities contribute to a strongest cross-border resolution framework. That's the moment to conclude. I like to mention a last point before concluding, and this is a side point, but which is again very near to my heart. As the SRB celebrates its 10th anniversary, we are also on the cusp of the new chapter in the life of our SRB appeal panel, which will undergo a complete renewal at the end of this year. Although they will continue fulfilling their mission until the very end of this year, the current members, I'd like to already express my deepest gratitude to all current members for their priceless contribution in shaping the legal foundation of our agency during its formative years and ensuring the legal soundness of our decisions. For today, I'm confident that the discussions will be enlightening and stimulating. It's through events like this that we can foster a deeper understanding of the complexity of our work and can get new ideas as to how we might strive to make our financial stability framework even better. Thank you very much.
Thank you very much, Chair. And with that, let me introduce our distinguished keynote speaker today. We're delighted to have Frank Elderson with us. He's a member of the Executive Board and of the Governing Council of the European Central Bank, as well as being Vice Chair of the ECB's Supervisory Board and overseeing the ECB's legal services. He'll talk to us today on the topic of Europe at a crossroads. It is high time to complete the single market. Mr. Elderson, please.
Well, thank you very much, Susan. Thank you very much, Dominique, for having me here today in what I believe is the most beautiful windowless room of Brussels. And actually, for those who are into me, they know it's not windowless, because although the slides are down, there are, if you raise them, there is a beautiful view of a wall. And I've always been sitting right there, more or less, and I've been looking at that wall for many, many days in a row. But it's much more beautiful than the Berlin Wall, and that is why this Brussels wall is still standing there. But there's one more feature about this room that I would like to highlight, and that is I have literally never been in this room without Dominique being present as well. And it is just a great thing that you have always guided me in those very early days, but also now, as you are guiding now this organization, this agency, as you said it, but also your work very importantly internationally in the FSB. So congratulations also with that role. So again, thank you for your kind invitation, and it is really, truly a pleasure for me to join you this morning to discuss the key obstacles to completing the single European market from the ECB's perspective. 40 years ago, Jacques Delors presented his now famous white paper, outlining a bold and comprehensive vision for completing the single European market. And this historic document identified 279 obstacles, many of them legal in nature, that stood in the way of the free movement of goods, people, capital and services across Europe. Now, Delors' white paper did not come out of nowhere. It was conceived as a solution to tackle the challenges plaguing Europe in 1985. Eurosclerosis, remember that word? Competitiveness crisis, paralyzing political tensions. These issues dominated the headlines of that time. And policymakers overcame these obstacles with the Single European Act, building on a clear and actionable timeline. And the rest, as they say, is history. Now, fast forward 40 years, and we now stand at a similar crossroads in Europe, this time facing, if you like, even greater challenges. Geopolitical fragmentation is on the rise, sparking demand for more strategic autonomy to ensure we remain the masters of our own destiny. Our economies are undergoing profound structural changes as we navigate the clean energy and the digital transitions. Meanwhile, there is a growing concern that we are losing out on competitiveness, which risks threatening our standards of living. So I will start my remarks today by taking a look at why completing the single market matters. And I will then cover some of the main obstacles hindering the single market from developing its full potential and conclude by outlining a possible way forward. And in this, I am guided by Jacques Delors' insight from 40 years ago, which could not be more relevant today. The time to talk has now passed. The time for action has come. So over the past decades, the single market has delivered remarkable economic results and substantially improved the well-being of more than 440 million citizens across our continent. ECB economists have found that the single market has added between 12 and 22% to long-run EU GDP. And importantly, the single market forms the bedrock of a predictable investment and business environment founded on the rule of law. Yet, Markets remain fragmented, and too many internal barriers are preventing the single market from developing to its full potential. And this is particularly the case for services, which account for, as many of you know, 75% of EU's GDP. Soberingly, 60% of barriers to trade in services are still the same as they were 20 years ago. This self-induced straitjacket comes with a significant price tag. The IMF estimates that internal barriers to the single market are on average, I think this is really staggering what I'm going to say now, so I'm going to say it again. Internal barriers to the single market are on average equivalent to a tariff of 44% for goods and a staggering 110% for services. And these figures underline an ironic reality. While much of our focus is directed at potential economic impact of external tariffs applied to goods traded with non-EU partners, we risk overlooking the far greater burden of self-imposed internal barriers. And these barriers are weighing on our economy every single day. Now, fortunately, unlike external tariffs imposed by us by non-EU countries, the decision to address internal barriers lies entirely with our own competence. One might ask, why would completing the single market concern the European Central Bank? The establishment of a fully integrated single market could enhance the effectiveness, first reason, of our monetary policy. The euro area's single monetary policy cannot be tailored to national circumstances. Economic theory identifies this as one of the inherent costs for countries joining a monetary union. However, merging currencies, as we have done, can still yield substantial net benefits when countries' economic cycles are closely synchronized, as this ensures that the ECB's single monetary policy is appropriate for all euro areas, for all the euro area countries. A deeper internal market, and here it comes, works as a catalyst to just such synchronization by aligning the economic structures of the countries subject to our single monetary policy. And this is achieved either through enhanced risk sharing and the free movement of goods, services, capital, and labor. A more integrated single market is also crucial for banking supervision. Now, although we have a single rule book in the banking union, national variations remain within this single prudential rule book. And in addition, foundational elements of the prudential framework, such as accounting standards, securities, and insolvency laws, continue to differ across member states, which adds unnecessary complexity. A more integrated banking system with more harmonized rules would yield significant benefits. It would make the allocation of credit inside the single market more efficient, while providing opportunities for banks to grow and compete across borders. Completing the banking market also, in addition to what I said about monetary policy and banking supervision, but completing the internal market also offers broader advantages. It could enhance euro area competitiveness by enabling businesses to scale up, achieve economies of scale, and allocate resources more efficiently. Increased competition drives innovation and productivity, while harmonized regulations lower costs and reduce administrative burdens for firms across borders. These advancements not only support the effectiveness of our monetary policy and banking supervision, but also address the challenges of an increasingly fragmented geopolitical landscape. But we simply cannot succeed if we have 27 different policies for our firms and industries. We cannot succeed if we fail to recognize professional qualifications across the European Union. And we certainly won't succeed if we allow a self-defeating spiral of national fragmentation to take hold. Instead, any meaningful debate on growth, on productivity, and on strategic autonomy must begin and end with a firm commitment to completing the single market and to do so in a timely manner. Completing the single market is not only necessary in light of the challenges of our times, it is also a legal imperative anchored in the EU treaties. So let me first recall the ultimo ratio of the single market being its completion. Single market. So as long as it's not single, it's not completed. As long as barriers persist to the free movement of persons, goods and services and capital, the single market remains an unfinished promise. And second, the completion of the single market is not just an aspiration, it is a legal obligation. Article 3.4 of the Treaty on the European Union states very clearly that the Union shall establish an internal market. Hence, the single market is nothing less than an explicit objective of the Union under the treaties. And third, the treaties are very clear that the single market is a key lever to foster citizens' welfare and promote the Union's interests in the world. And this is very important at a time when increasing strategic autonomy has become essential in light of geopolitical rifts and shifts. Thus, completing the single market is not merely something that is a nice to have, something we might do when the moment is right, something that depends on the political winds and tides. It is a legal imperative, strongly anchored in the treaties. So if the treaties are crystal clear about the need to complete the internal market, one may ask, so then what are the main impediments to its full completion? And more importantly, what can be done to address those impediments? Now, to be clear, member states and EU institutions are in the driving seat when it comes to addressing the barriers hindering the single market, not central bankers and supervisors. However, the ECB very much welcomes the recent momentum to deepen the internal market. And I would like to reflect on this important endeavor from our perspective. Encouragingly, the challenge of completing the internal market is well understood. The Commission has accelerated its work on making the single market simpler, seamless and stronger. And as a first step, the EU and the member states must work together to prevent the emergence, logically, of the emergence of new barriers. However, that's not enough. To achieve meaningful progress, the EU must also remove the barriers that obstruct the functioning of the single market. And in this regard, the European Commission's new single market strategy provides a clear and focused roadmap, identifying what they have coined the terrible 10, the most significant barriers that must be addressed. So let me highlight 3 key points, which we have internally called the troubling 3, relevant for delivering on our mandate. And the first one is complexity. The key issue here is not complexity per se, but excessive complexity. As Albert Einstein has wisely said, everything should be made as simple as possible, but not simpler. And this principle applies equally to regulation. EU market legislation must often balance a wide array of diverse market interests and national policy preferences, which inevitably result in complexity and diverging rules. And in this context, we welcome ongoing simplification efforts, provided that they do not compromise the fundamental purpose of the rules. And in this respect, it is important to emphasize that reducing complexity is best achieved through European harmonization, not by lowering regulatory requirements. Harmonization not only simplifies the legal framework, but also makes it more seamless and, when based on best practices, stronger. And as I stated earlier this year, don't cut rules, harmonize them. After all, after all these decades of European integration, there is still no better way to simplify and to lower the regulatory burden than to reduce 27 regimes to one. Another main obstacle to advancing the internal market lies in the fact that it is a shared competence between the EU and the member states. Member states have legitimate policy interests that may have unintended consequences for the single market. Think about areas like consumer protection, health and safety. In these fields, national preferences differ, driving fragmentation and complexity in EU regulation. Member states also contribute to market fragmentation through delayed transposition, incorrect application, or overly burdensome and unnecessarily divergent implementation of EU law, a practice commonly referred to as gold plating. Although I actually think it would be more fitting to speak of lead plating, as from a European perspective, this practice results in something that is not shiny like gold, but heavy like lead. Such practices are also evident in banking supervision, because the prudential framework also consists of EU directives that need to be transposed into national law. For example, in several areas, including licensing and governance, rules differ across member states because laws transposing EU directives are not fully harmonized. Dealing with a wide array of different national rules is far from ideal, logically, for the single European supervisor. And further harmonizing the regulatory framework for the banking sector would further enhance our effectiveness as a banking supervisor. And while harmonization within the internal market has typically been achieved through directives, there is an increasing reliance on regulations to legislate the financial sector. Regulations clearly offer an advantage. They do not require transposition into national legislation, thereby avoiding delays, transposition deficits, and the risk of national preferences, diluting the intended benefits of the internal market rules. In areas where full harmonization is currently politically or technically unfeasible, alternative approaches, such as introducing a 28th regime, could provide a practical and effective interim step. Finally, the establishment and operation of companies across the EU remains unnecessarily complex and costly, largely due to the fragmentation of legal rules across member states. And this hinders businesses, particularly startups, from scaling up effectively. And a related challenge persists in the banking sector, where cross-border banking integration remains limited, despite the EU's single rulebook, single supervisor, and single resolution mechanism. The advantages of deeper cross-border banking integration are clear. Eliminating barriers to integration would enable banks to achieve economies of scale and enhance risk diversification, with cross-border mergers offering opportunities for greater profitability. However, the current level of cross-border integration restricts the potential for private risk sharing within the European banking market. And this fragmentation also hampers banks' ability to optimize liquidity management, ultimately increasing risks to financial stability. Now, European banking supervision has taken important steps to tackle obstacles to cross-border banking integration. For example, we issued a guide affirming that cross-border mergers within the euro area will be treated the same as domestic mergers. We clarified that European banking supervision will not hinder banks wishing to convert subsidiaries into branches. And additionally, we made it clear that banks operating across borders through subsidiaries can apply for the liquidity waivers to pool liquidity across legal entities. In short, we have made it as clear as we could. And let me repeat this message very clearly today. As long as regulatory prudential requirements are met, we will not stand in the way of cross-border banking consolidation and cross-border banking integration more generally, very much to the contrary. However, despite these efforts, progress on financial integration in the euro area remains limited. And this indicates that remaining obstacles are influenced by factors unrelated to banking supervision. And in this context, reaching a political agreement on the banking union's third pillar, a European deposit insurance scheme, is more critical than ever. And moreover, avoiding undue fragmentation of the single market and unjustified impact on the freedoms of the treaty is critical. And beyond progress on banking union, advancing the capital markets union is equally critical, as the two are intrinsically linked and mutually reinforcing. A stronger banking union, for instance, helps prevent shocks from spreading to broader capital markets, while robust capital markets diversify funding sources and reduce banking risks. Let me conclude. But before concluding, let me offer one final practical suggestion, drawing from our own experience with the Economic and Monetary Union. The success of the euro was in part built on the foundation of a clear and well-defined ex-ante timeline in the Maastricht Treaty, setting out a roadmap for economic convergence and the creation of the common currency. Similarly, the adoption of the single market in 1993 crucially built on the timeline contained in the Single European Act of 1986, which was championed by Jacques Delors. And also today, in light of the mounting challenges that we face, we don't have any time to waste. And also today, we need to move forward and complete that single market. And to effectively drive progress, we need a clear and time-limited roadmap, which includes concrete interim milestones and crucially a mobilizing deadline, as the governor of the Banque de France has recently called that. We must undertake this endeavor jointly. EU institutions, member states, businesses, and ultimately all of us. Because ultimately completing the single market concerns all of us. And as Jacques Delors wisely said, Europe is not just about markets, it is about a way of life. To protect that European way of life and to foster prosperity, strategic autonomy, and on competitiveness, our best course of action is to timely complete the single market. Thank you.
Thank you very much, Mr. Elderson, for such an interesting, comprehensive start to today's discussions and for, I think, reminding us so clearly what's at stake in our panels today. So with that, let me introduce our first panel, which is titled From Off-Site Resolution Planning to Resolution Operationalization, exploring the legal framework on deep dives, on-site inspections and dry runs. And our moderator, SRB Board member Radek Urban, will introduce his expert panel and get us started. Radek, please.
Thank you, Suzanne. Good morning, everybody. Thank you, Dominic. Thank you, Frank, for the kind words. Ladies and gentlemen, this is my distinct pleasure to welcome you at the SRB Legal Conference, and more specifically to this first panel. I am Radek Urban, and I am a board member of the SRB since this April. Previously, I worked in the Czech National Bank as Executive Director of the Markets and Resolution Directorate. I'm delighted to have the opportunity to moderate this panel on resolution operationalization. Oh, I hate that word. But I learned recently that it even made its way into the United States of America. I thought originally that this was a Brussels creation. No anymore. I will try to say that without hiccups. But to introduce our distinguished speakers today would be superfluous. I think that they do not need much introduction, but I would like to take a moment to acknowledge, and I will start, of course, with Denise Bauer-Weiler. She's an Executive Director, Management Board of the UBS Europe SE, Roberto Cercone from Banca d'Italia, Jaakko Veuro from Rahoitus Vakaus Virasto, the Finnish Resolution Authority, and Pedro Machado from the ECB. And Pedro was previously a board member here at the SRB. Before I give the floor to our speakers, I'd like to offer a few comments on the topic of the discussion that was started this morning. The transition from off-site to on-site, and the focus on making the framework operational. That will mean a transition from the first 10 years of our existence to the next 10 years. And that will also focus on deep dives and on-site inspections and dry runs. Now, as our chair, Dominique Laboureix, mentioned earlier today, our strategy, our 2028 vision, marks a shift in focus from resolution planning into resolution readiness and testing. And I make a note on this first 10 years and the next 10 years. The first 10 years of a build-up of the resolution capacities were marked by quantitative things like MREL, things like contributions to the fund, things that are measurable, that are tangible. Now we're moving into a little bit more qualitative, things like preparedness, governance. But there is a link between these two, and the link is testing. And to give an example, we have already done something like 60 deep dives across many jurisdictions in our remit. Recently, we have enhanced our testing framework, and we have developed the SRB operational guidance on resolvability testing for banks. And this guidance implements the EBA guidelines. That is a signal that we play by the book. And this guidance aims at the harmonization that Frank was referring to. We will be using a harmonized single approach, and we have already designed a multi-annual testing plan. This SRB guidance was developed with industry participation. This is an integral part in our way of doing things. We need to speak to banks, we need to get feedback, and we are getting that. Also, organizational-wise, we have developed a policy directorate team that's part of our organizational structure, and that unit is playing a vital role in our testing program. Regarding the on-site inspections, and that is something that Dominic also mentioned in the opening words, we are one of the very first authorities, resolution authorities in the world that have a dedicated program and dedicated formal OSI program, exclusively targeted at on-site plans. And we have an objective to achieve, plan, execute, analyze several on-site inspections this year and forward. And this is the first year, so we will take some time at the beginning of next year to pause, take breath, and say, what have we done in a good way, what can be improved in the way how we do these on-site inspections. It is critical to also involve the national resolution authorities, because the SRM is not only the board itself, but also our partner authorities in the banking union member states. Last, in this opening remarks, I think it's very important that we have Pedro Machado here, because the ECB, the SSM, has a long-standing tradition of on-site inspections. We can learn, we can share, and I think the best way to describe our cooperation is that we indeed aim at coordinating efforts. We do not certainly want to duplicate, and that is the way forward. I think we have an extensive panel in front of us. Let me conclude these introductory remarks. I do not wish to take more of your time now. The organization of this panel is that we will have 4 speakers, and then there will be definitely time for questions and answers, and there will definitely be some balance between questions from you that are present here at the SRB, but also for those who are remotely connected. With this, I would like to give the floor to Roberto, because that is the way how we planned the panel. Roberto will be followed by Denise, then by Pedro, and the panel will be concluded, the opening remarks by Jaco. But this is the way how we organized. You tell us later whether the organization was logical. Roberto.
Thank you. Good morning, everyone. Thank you, Radek, and let me thank also the SRB and the organizer of this event for inviting me. It's a pleasure to stay here today, and in particular in this panel. In my intervention, I'd like to touch some points of the general framework of the on-site inspections and more in general on-site checks, even if different from the inspections in strict sensus. Next slide, please. I would start from the... okay. This is...
You see, operationalization.
Yes, of course.
It's not self-explanatory.
It's not self-explanatory. Okay. Perhaps I have understood. And I would start from the taxonomy and goals of different tools. Then I would like to go on the principles and the key points in the defining and implementing the on-site checks. As regarding taxonomy, why we need the taxonomy here? Of course, taxonomy is always important, but it's particularly important because we have witnessed over time to a sort of proliferations of tools and also denomination of single or specific tools. Also looking at different regulatory sources in this area. So it's important to have a common understanding on what we mean when we discuss about different tools which are part of the on-site checks. And the ordering criteria can be various. I've chosen the criterion of how is in charge of implementing the on-site checks. And the result is what you can see in these slides. We have the first point, typology, which is more traditional, which is the inspections. They are implemented by the resolution authorities in the premises of the bank. And they generally have a wide scope, which encompass the processes, control arrangement, and capabilities which are relevant for the resolvability of the bank and for the contribution to the Single Resolution Fund. The second typology is the so-called deep dives, which are implemented by the authority as well and implemented in the premises of the bank as well, but they are different because they are intended to be a kind of extension of the remote analysis implemented by the off-site checks. So this is a tool which is particularly useful when the remote analysis raises a problem or topics which needs to be assessed in depth, and the on-site checks could help in doing so. The consequence is that the deep dives are much more focused than the general traditional inspections, and they are less formalized. The third category is a residual one. It embraces the other on-site checks, and the peculiarities of this category is that they are implemented by bank directly. But this peculiarity is blurred by the fact that the resolution authority can have a role even in this kind of checks, because the resolution authority can ask banks to implement, to self-implement these checks, and in particular, that's more important, the resolution authority may join this kind of exercise, even if in what we call the silent mode, which means not having an active role, but they are present, they know, they follow the implementation of the checks. And that this could have some implication if we go on specific legal topics related to the use, for instance, of the information which can be acquired in this kind of exercise. Well, the peculiarities can serve as a guidance for choosing the most appropriate tool, of course, from time to time, and then in relation to the needs and then the subject of the investigation, the right sequence of different tools, and also the right balance between authority and banks-led checks. Well, other two general comments. The first one is that the on-site checks has gained a pivotal importance in the context of the strategic revision of the SRB, because as already Radek told us, the focus has shifted from the MREL and resolution plan building to the assessment of what we call the preparedness, which means the concrete capacity and ability of the bank to manage a specific situation of crisis. And of course, in this context, not only the inspections, but also generally speaking, testing, simulations, dry runs, and so on are again, a very important tool for addressing the task. Even because these tools are very flexible and may have different goals. Here there is an attempt to list some of the fundamental principles which guides the activity of the authority, broadly speaking, and in particular are applicable, of course, also to the on-site checks. Effectiveness, efficiency, proportionality, risk-based approach. I don't want to spend time on that because they are very familiar to all of us. Let me only say something about the concept of proportionality. Of course, we have different definition of proportionality. I've chosen the definition which is given by the EU Treaty because I think it's very clear and precise. And it's important to say that when we speak on proportionality, we tend to mean that proportionality is something less than the standard, less costs, less burdens, less rules, less obligations. And that's true, that's correct. And it's well summarized by the first part of this definition, not exceed what is necessary. But is incomplete because in the definition we have also the achievement of the objectives. So it's not possible to conceive a minimization of costs, burdens, rules, and so on without acknowledging and reckoning the implementation of the mandate, basically. So if I can use a slogan, I would say that proportionality seems to mean No more, no less, no sooner, no later, just the right thing at the right moment. Difficult? Yes, of course, tremendously difficult. And this explains the responsibility in being proportionate, also because we do not have here some quantitative metrics, of course. And that's why we need, as authority, and we have actually proper flexibility and discretion in fulfilling this mandate. Well, the founding principles I've tried to summarize before can serve as a guidance for defining specific characteristics and key points of the on-site checks. First of all, the methodology, which is important for every kind of activities, of course, but is particularly important when the activities implies a certain level of discretion, like the implementation of inspections, for instance, is. So it's particularly important, not only for assuring the so-called level playing field, which is of course important for any new institutions in relation with the plurality and complexity of the banking systems across the jurisdictions, but even for assuring the quality of the output. A quality, because a good process means a good quality if we have a certain level of discretion. A good process can influence the quality of the outputs over time in order to have, in any case, and always a good level of the findings in this case. The second point is planning. It's quite trivial, but here the key word is not planning, it's integration. That means that the plan, of course, has to exist, of course, but has to be integrated. That means that the plan has to put together on-site and off-site checks, different kinds of on-site tools, and to the extent it's possible, also the activities of different authorities, not only the Single Resolution Board, of course, competent authority is the one, of course, in first line in this situation. I don't want to spend time about the appropriate preparation. Of course, it's important. This is my last slide, and here you can see the two, I think, important things, which is, one is the interaction between the on-site and off-site checks. Here the keywords are separation on one end and again integration on the other one. Separation is essential because it's the way of assuring a real added value to the on-site checks in comparison with the off-site ones. Of course, the independence of the inspectors is essential in order to have a real complementing activity with reference to the knowledge of the bank, which is in the hands of the remote analysts. But of course, we need also to have the integration, because we need that possible different views of the inspections and the remote analysis have to converge in an overall consistent evaluation of the bank, and this can be done basically under the responsibility of the remote analysts, of course, because they are in the best position to do this job, because they have a continuous relationship with the bank, they have an overall and long-standing knowledge of the situation of the bank, and so on. The last point is about the coordination with the competent authorities. Of course, this is a crucial point. I don't want to say nothing specific on that. If not, here we can have the possibility of exploring also an unusual way of coordination. For instance, the last point, the possibility for the SRB to ask the competent authority to carry on the assessment, on-site assessment, even for the purposes of the resolution. This could be one possibility. In Italy, we have this kind of protocol between the Bank of Italy and the market authority on this field. So it could be explored. If this, it's not clear the legal foundation of this kind of cooperation, but perhaps it could be something to be further elaborated. Thank you. I would stop here for the moment.
Well, thank you, Roberto. Thank you. Now this panel is completed by a presence of a banker. I mean, it is my pleasure to welcome you, Denise, because with the involvement of banks, our work is being completed. I would like to ask you for a couple of words how you see this initiative in testing and what follows.
Yeah, thank you very much for highlighting. I thought you invited me because I'm also a lawyer, and I actually must say that legal conferences sometimes provide even more substance to the table, and I'm very glad and honored to speak today, in particular at a legal conference, I must say. But of course, I'm also prepared to challenge because as an industry representative, I thought you would be also interested in what it means for banks. And I mean, I'm very happy to listen to Roberto because all of those keywords actually are there, but what do they mean? So really to bring them into life is much more difficult, and also for the authorities, I would assume, than just, deciding, yes, I apply a certain principle of proportionality. What does this really mean? I think this also requires a bit of a mindset change from an authority perspective, and we need to make use of the current momentum, presumably, to challenge ourselves, to do a bit of self-reflection. Do all of our authority staff really understand what proportionality, what does this mean? What does it mean to try to maybe also simplify and do some topics in a coordinated manner? And there, I think it is not an easy task you have. And I'm very grateful that we now can speak in the broader context of SRB toolkits about that. And starting with the SRB toolkits, I mean, while I think the industry in general endorses the use of the toolkit, which is legally granted to the SRB, to further enhance resolution capabilities, the effectiveness of the upcoming initiatives could be enhanced if they are based on effective preliminary cost-benefit analysis. And I mean, the reason is because if we do it right, we have a lot of value in it, but if we do it wrong, it could be very detrimental and result in unnecessary burden also for the banks. And what do I mean with cost-benefit analysis? I mean, really in terms of practice, it's an ex-ante impact assessment, but also it means when a certain administrative act, for example, is issued, that we would really like to see the rationale idiosyncratic for the bank, why is this now needed, yeah? And also for this specific point in time and also specific to the scope. And there, a lot of thinking is really required. It should not be just, yes, I need to copy-paste a certain sentence from any other act. It's really, why do I now believe as an authority this particular measure needs to be applied? And then also, I think it would be worth thinking about an ex-post assessment after 1 or 2 years, and just the slight hint that the number of findings might not be the sole indicator of an effectiveness of a certain tool. Further, proper bank preparation is key. As you also highlighted in terms of timing, it would be very good to understand the frequency of the various tool sets and also the differentiation of that tool sets early on. Also to ensure that our boards are educated well, because sometimes I have the impression when I also go to the Supervisory Board, where you do not always have European kind of bankers in that it is an education task also. So the easier and simpler we can also, contribute, and what is the objective and what is the differentiation, and not to be too mindful of OFC versus OZ. So these are slight things, but this is really important that we speak the same language in order to also to simplify the main message. And then also for us to be prepared and also know now it's important. Now I need to listen. Yeah, this is now really key for the risk and for the management of the bank. In addition, for banking groups operating internationally, coordination with resolution authorities at international level is key to ensure efficiency and also consistency across the activities in order to avoid duplication. And I'm very happy that also Frank spoke about that very comprehensively. I think the SRB could now really develop its activities building on the lessons learned from the SSM experience. So the ECB has now, and Pedro, I mean, it's good that you move jobs, so to speak, because you are presumably also a bit of a segue here. How now to consolidate the toolkit and the supervisory practices and going through a review of the supervisory review process, which will be positively refocused towards a more risk-based approach to avoid one-size-fits-all exercises, is presumably something where the SRB should look at precisely. And also, the ECB is actively supporting currently the efforts to simplify the European regulatory framework through a task force, which has been just announced. And we would like, or I would like to encourage the SRB also to leverage this experience or possibly even join the task force so that key areas under the remit of the ECB are also included in that simplification efforts. And to give you some examples, like where the SRB framework could be effectively simplified and make more proportionate without decreasing prudential and resolution standards, is the variance strategy for those banks where we are EU banks belonging to non-EU groups. Because per definition, I mean, variance strategy means if you're a single point of entry institution that you try to, come up with a strategy with this in an uncoordinated manner. And the likelihood that this will be also then feasible at the end might be limited. So the question is, where is the value? Why do we really need to ask for a variance strategy in such an environment, for example, is something which you can, for example, include in your cost-benefit analysis at the beginning. And also, I think as we continue to strengthen, rightly so, the resolution capabilities, it's important to ensure efficiency in the use of the existing tools and data set. So just as an example, the development of scenarios, or further scenarios in the testing environment is something which adds really additional burden. And the question is, why can we not leverage the scenarios like, for example, stress testing or ICAP, which are already there from a supervisory perspective? So where is really, again, the value of adding the additional? There might be the reasons on certain cases, but maybe not in general and per se. So maybe it's also a bit of a change of the burden of proof to some extent, to speak a bit of from a legal context. And also, I mean, speaking the obvious, presumably authorities should seek to minimize duplication by making full use of data already submitted to supervisors. When I focus on on-site inspections, also maybe some very precise examples. I mean, minimizing overlapping activities. You highlighted integration, yeah. So that's indeed key, and also scope, because I could imagine that, for example, DORA, business continuity, operational resilience, but also MIS and governance requirements are scopes where presumably SRB also will look into. Yeah, so I think it's really key to be integrated in the broader also SSM context. And when it comes to the quality of the assessment, I believe an effective approach would also to avoid the so-called and often quoted tick-the-box exercises. I mean, assessing compliance based on outcomes rather than on merely meeting documentation requirements is key. And you repeated one of your main sentences, but for me, this is really also one of the main sentences. It means, why do I do this? What is the outcome? What do I really want to check, and not having documentation requirements? And we often see that some of those findings, for example, after on-site inspections banks get, is really more documentation driven as well. Yeah, so we have different ratings for that. But the question is, does it really change the risk profile? Does it really change, the risk, or does it help in terms of financial stability? That should be our mindset, and this presumably also requires a bit of trainings or reminders of those people who are actually then performing those on-site inspections. And also an idea sharing, for example, common findings from on-site inspections into public feedback statements, so that the industry is aware of expectations on general issues. But this does not mean whenever something pops up then on such a dashboard, we need to comply with that. Yeah? But at least as a bank, as a board member, for example, you can check, is it relevant for me as well? And do I need to do a read across, for example? Could be helpful, and not waiting for your own on-site inspection and then learning it on your own. And in terms of optimal process and design, my recommendation is to keep the inspection condensed. And what do I mean by that? Not coming with, number of auditors for 3 months or 2 months. Yeah. So maybe it's really more efficient to say I'm there for 2 weeks, and then also the bank can prepare for 2 weeks, and then you will get immediately all the information requirements. Yeah, and it is really more targeted. And I see that compared to banking supervision, maybe in the SRB environment, we have more optionalities really to also condense the timing perspective here. And also, when you announce including a proportionality statement in the announcement letter would be helpful. Also, it would be interesting to understand from you whether you also plan on-site inspections at service providers, for example. That would be, for me, an open question. And also, presumably, a bit of it ask that you do it on your own. And that you really then understand, based on your own knowledge which you get on the bank's premises, what does this mean for me as a resolution authority? Because if you only outsource, there are different interests, again, around yourself. So I would really like to encourage you not to mandate external audit firms, but rather learn jointly with us on the ground. And then also, I would really like to encourage a real iteration process. And why do I say that? Yes, right to be heard is legally super important, yeah. But right to be heard is too late, often in the process, because, and sorry, Frank, but ECB is sometimes really also very complex in terms of governance, and we had a lot of experiences where it was somehow too late to really change findings or to change certain understandings in the process, because slides were already written, etc. And having really also with the senior management, with that holistic view, and also from your side with senior managers, interim feedbacks during on-site inspections, and then also before the official right to be heard, because we also often, and this is a debate on itself, do not want to formally object against measures for various other reasons. I think having this real iteration already during an early phase for us is key. And then on a couple of thoughts on testing activities to conclude. So after regulators have now spent many years establishing effective framework for bank resolution, and the banks themselves developed the required resolution capabilities, now it's really time on testing and to focus on testing in order to verify the effectiveness and to identify any needs for further improvement. And I also appreciate that the SRB has consulted on its new operational guidance that is aimed at providing additional clarity. However, the testing framework and capabilities must be targeted. The proposed requirement to develop testing environments is not proportionate by all means. If at all, it should only be required in very specific cases, considering the high costs associated with building and maintaining a duplicate production system, for example, for accounting, that would be at odds with the current European initiatives to simplify regulations and requirements. And in addition, from the perspective of a EU bank belonging to a non-EU headquarter group, the value of developing local testing capabilities must be also limited. And maybe we should not say that we do not test, but it could be also an integrated testing in a group, in a group testing, for example, in order to create actually the same outcome. So in conclusion, I would like to emphasize the importance of cooperation amongst the authorities, be it home host authorities, be it SSM, SRB, be it with the national authorities, and also to take the advantage of the current momentum in Brussels in particular to properly self-reflect on the objective of proper resolution planning.
Thank you, Denise. This was like a draft rule book for us. Now, I will immediately react to one or two questions, but in order not to take time from our other panelists. Currently, we do not plan to get inspections at service providers. And currently, we do not plan to use outsourced consultants to perform the OSI. But with this, let me move now to Pedro. I will save my comments for the end, but I will not like to monopolize the discussion because the floor is then to our participants. But this was a very good intervention. Thank you. Now, this logically feeds into the more experienced authority, and that is the SSM. I would like now to ask Pedro about the SSM experience in OSI.
Can I just have the remote?
The clicker. Thank you.
So, thank you very much. First of all, I would like to thank you for having me, for having let me in the building again. It's always a pleasure. This has been my house for 5 years, so it feels very it's very touching to come back here with another hat. So thank you very much. And I take the opportunity also to wish Slavka, Radek and Miguel all the best in their new functions now that you have started. So your success will for sure be the success of the organization. So with the new hat, let me then start here giving a bit of an overview about the work that has been carried out by the SSM, in particular over 10 years. 10 years is not so long for an organization, but it's true that we can today build on an acquis that has been built throughout I would say the successful attainment also of a supervisory culture that has been built over these 10 years. I think this is a major success of the SSM, which was not a given at the beginning. And I think it's also translated in the way today the on-site inspections and the internal model inspections are carried out and have been carried out. So I think here it's which slide? Okay. So we have prepared a small slide deck just to highlight the main features and also to recap a bit the more recent work that has been done and also where we are going to progress. This on-site inspections and internal model investigations, this is a very structured process. This is a process that starts on this part of what we call the SEP, the Supervisory Examination Program. This is approved by the Supervisory Board, and I'll go in a minute in terms of how it cascades down the organization before it arrives to the Supervisory Board. And of course, it's mainly an on-site work, which means that the teams have to have access to the premises, and having access to the premise means also having access to all sort of information, in particular the IT systems where this data is stored. And this is the core of the work when we talk about on-site. Of course, it is complemented with some desktop work and what we call sort of a hybrid investigations. And sometimes it's also complemented with also for work at off-site level. But in any case, this is the nature of the work, and it is usually a composite sort of team, which is made by 10% by the ECB, so contrary to the GST sort of composition, which is made usually between 10 to 25% of ECB staff members. In this case, it's mainly made by NCA experts, and to a minority with members of GSTs. But this to mean that this is really highlighting the sort of cooperation within the SSM. So these are teams that are picked up from experts from all parts of the SSM, and which form teams that then go to carry forward these on-site inspections. And very important, there is a predefined scope. I think also from a legal point of view, this is an important feature that I think we attach quite an importance to this, and then it ensures with the production of a report where it's communicated by the GST to the bank on the findings. So you see that the objectives are quite comprehensive in terms of the risks that are being sort of targeted with the on-site inspections. The on-site inspections range in terms of scope. They can be ranging from a sort of a full scope in terms of the risk profile of the bank to more targeted kind of exercises to many times the ECB engages in thematic also inspections. I think a case in point has been the so-called TRIM, which is this large exercise on the review of the internal models, a very comprehensive exercise that is being carried out by the ECB throughout many years, and has been translated in very significant findings also for the banks. But you see that this entails not only financial risks but also non-financial risks, and in addition, of course, the internal models, which form today a significant part of the chunk of the on-site inspections. And the very ultimate objective, of course, of this work is not just because the ECB likes to go on-site, is really to update, to sort of enrich the work, the supervisory assessment by the GSTs. So the very purpose of the on-site inspections at the end is to strengthen the supervisory work. And I think this has to be made clear. So it's not a sort of activity that would exhaust itself in its own purpose, but really is fitting into the broader work on the supervisory output of the ECB. And then the principles, I think Roberto already touched very well on what are the underlying principles of on-site. I think this is both for supervision, I think, and both for now for resolution. Clearly, the sort of principles have quite a commonality. I would just maybe highlight in complement to proportionality that Roberto mentioned before, but the fact that when we carried forward also an on-site inspections is not that you are relying only on past data. Sometimes even you cannot build the on-site on past data because simply you are targeting a different kind of risk for which there is no data. So if you would carry an on-site to target only data for which there is only data, it would fall short of what would be the exercise. So the on-site goes beyond present or historical figures and as really a forward-looking and looks at future impacts in terms of the risk profile of the banks. As you know, the ECB has always been a sort of a forward-looking approach in terms of supervision, but we have also now been confronted with new risks like climate and environmental risks, and now also geopolitical risks for which it is fair to acknowledge that we don't have past data, for which we have to many times do forward-looking assessments. So, but the ultimate goal, let me just also mention, is that the findings should be translated in remedial actions or corrective measures to be undertaken by the banks. As you see, and we just have here a snapshot over the last 3 years. It has been quite a comprehensive exercise or sort of comprehensive activities in this field. As you can also see that in internal model investigations have been clearly very much targeted until 22. They have even started before, for good reasons, by the way, but that we can then discuss. But if you look at the breakdown here that exists for 24 that we have just selected, you see the wide palette of risks that are covered in terms of the on-site inspections, and they are not only confined, as I said before, to financial risks. You have also, as you can see, governance risk. You have, of course, operational risks, including IT risk, which rank very high also today in terms of the priorities. But also one very important aspect related to non-financial risk, which is business model and profitability. And if you see on the left side how this interacts inside the organization. So the ECB has a fully dedicated DG, Director General, on-site and internal model inspections, so-called DG OMI, which works closely also with the horizontal DG Hall. The direction of travel is set by the Supervisory Board. I think it's important to retain this at the beginning. This is something that the Supervisory Board provides, at least on an annual basis, a sort of approach towards where the on-site inspections should be unfolding in terms also of priorities. Then this is translated in the organization between these two DGs in concrete proposals, which are discussed by the GSTs. Or with the GSTs, better said. And there comes what we call inside in the ECB jargon, the vertical DG, so the DGs in charge of the banks, which of course feed into what should be the project exercise that should best fit the supervisory needs of each of the GSTs. So this is not something made in the abstract. I think it's important to retain that OSIs, again, I want to stress, because sometimes I also hear things that seem that OSIs inspections are a bit exercises that ECB does sometimes in abstract. This is not the case. This is really building on also the needs by the GSTs. And then those projects are selected, as you can see, at the end, after this very sort of close and intense dialogue in the organization. So in terms of the different steps that we follow, it's a very structured approach, as I said, and for also good reasons, not only operational reasons, but since we are in a legal conference, also for legal reasons. I think it's important to retain that there is here a due observance and the concern in observing key steps of the process that leads to a decision on-site. Not least because a decision on on-site is also an act that itself can be subject to judicial review, and we take this very seriously. So that's why there is a sort of very structured approach in terms of the preparation of an on-site or an internal model investigation. One thing that maybe is that I would like to retain without being exhaustive and in the interest of time, again, is this interaction as it is planning, because planning was mentioned rightly by Roberto, is not only the planning but then the staffing. There is a unit inside the GOMI who coordinates the integration, the composition of the team. and is responsible for coordinating where each team goes. And this is quite a heavy work because you have to coordinate, as you know, even the amount of on-site inspections that are carried out on a yearly basis. This is quite a significant work also in terms of coordination. And we are mindful that this also entails a preparatory work and also a significant workload on the side of the banks. And being mindful of that, that's why there is also this preparatory phase with the notification to the banks so that they can also prepare. And then there is a close interaction. So Denise mentioned before the issue of the interaction with the bank, as you can see in the different phases. Not only before it starts, when it starts with the kickoff meeting and then the further execution, but then as you can see, even before there is the draft decision or the draft letter, depending on the severity of the findings, there are already the bank is given the opportunity to provide comments early on. So even before the right to be heard process. So I think it's at the same time today we can say with a certain confidence that this is also a very iterative process with the banks. And then very important is that there is also a proportionality in terms of the decisions that are taken according to the findings. The more severe the findings have, we have the so-called F3 and F4 findings. These are the most severe findings. Then there is a formal process in terms of the approval at the level of the Supervisory Board, which is preceded then before the final decision by the right to be heard, which is a procedural guarantee, of course. So this is, in a nutshell, how the process carries forward. Here is a bit I would not. Let me just maybe highlight before, because I'm just coming to an end, but let me here highlight without being again exhaustive on the information that is on the contents of this slide. One very important thing that really the ECB is investing a lot of efforts, resources, and by the way, money, because this costs money, is technological tools. Today, there is a large project that is being developed, the so-called Medusa, which basically will be a single platform where all the sort of findings and measures that are identified during the on-site inspections are brought together. So are brought together in terms of information, and this is I think it's going to be somehow a game changer also for many of the sort of workload that today inspectors face when doing this on-site, because it will allow them also to release from repetitive manual tasks that still have to be carried forward today. So technology and innovation, which is something that the ECB fully embraces, is very key also to deliver on being more agile, more efficient, and more effective, and also somehow also contributing to a certain simplification, if you want, as regards the output of the processes. And finally, and this is really the last slide, is the importance also of networks. I think and this is something that eventually it will have to be decided at the level of the single resolution mechanism, but is this structure of networks that feed into the work and in particular ensure consistency, in particular ensure alignment amongst the system in the SSM. This is very key also for the success of the on-site inspection programs. I think this is also gives the assurance also for the banks that what is discussed, that what is put in or what is carried forward in the on-site inspections is preceded also by a thorough preparation also at the level of the system in terms of, as I said, in terms of ensuring consistency and alignment in terms of the output. So as you see, we have three main sort of networks which contribute very much to ensure and to deliver on these key drivers as regards the quality of and the consistency of the output of the on-site inspections. And with this, I'll stop here. Thank you very much.
Thank you. Thank you, Pedro. It's a benchmark or maybe an inspiration, not a benchmark. We can never achieve, being a small agency, we can never achieve the scale, but the inspiration certainly. Before I pass the floor to Jaco, let me mention one housekeeping issue. We had to be brave, all of us, by using jargon. You know, MREL, variant, resolution strategy, supervisory evaluation program. If we are incomprehensible, shout. Yeah, but we are brave because it is our world using jargon and acronyms. With this, give the floor to Jaco to make the circle full.
Thank you. And thank you for asking the people to shout just ahead of my intervention. I also want to say I'm really happy to be here in this legal conference. I don't know if I can claim to be a lawyer. I've graduated from law school. I've held a rank in the government that is legally required to be a legal professional. But I have mainly worked on financial stability topics, and I have mainly worked with the economists. So I'm very delighted to be here today in this legal sphere, so to say. Maybe also who is sitting us here. So I'm ending the journey, and also I think our panelists we also represent the diversity of the banking union. Roberto being the head of resolution in Italy, housed within Banca d'Italia, which is one of the most what would be the right word? The most reliable, powerful, well-resourced central bank, national central bank in the euro area, where you combine within one house the NCA operations, the NCB operations, the prudential supervision, and resolution authority. I represent the different reality coming from the north, from a self-standing national resolution agency, which also is responsible for DGS operations in Finland, but we stand completely separate from the prudential supervisor and the national central bank. And while this is a kind of a bureaucratic way to start this, but I think it's also worth mentioning that while the legislation is the same, it's not only harmonized in this context, but mainly even coming straight from the regulations. Also, the institutional setups do give a different flavor to the actual day-to-day operations, and that is also something that in our life as resolution authorities, it's something that we need to take into take into account, and that might also impact our choices on how we use our powers. I was kind of given a role to comment on the previous speakers, and I'm good to hear that so far no one has challenged why should the resolution authorities be conducting on-site investigations. Maybe that will come in the questions from the audience, and we can come back to that. I will give in a way the institutional answer. I think this was a deliberate choice of the European legislator when the BRRD and especially when the SRM regulation was being negotiated. The legislators specifically wanted the SRB to have on-site investigation powers independently of its own. If you look at the regulation, of course, there is also a very strong requirement for very close cooperation between the competent authority and the resolution authority, which in the case of SIs means ECB and the SRB. But still, that was clearly a choice by the legislators. From another perspective, we are discussing in a way under the heading of operationalization of resolution planning. And in a way, what does it mean in practice from an authority's point of view? And here I would go into a little bit into the discussion on proportionality. And I think I would say that the better we will succeed in operationalization of our plans, the better we will succeed in achieving proportionality as well. Why? Because at least for me, what is the idea of this drive towards being more operational is that we are not doing planning, we're not doing resolution planning for the sake of doing it. We're not setting requirements for the banks for the sake of setting requirements for the banks so that we can show that we have done our work properly. But it means that we are mature enough that we understand what is needed in the actual crisis situation, and we put exactly those requirements in place. Easier said than done, and then this comes to the importance of testing and what in our jargon we as authorities call simulations. So in a way, what is a test for a bank? If we test ourselves, we call it a simulation. I think this is really important and integral step. So, and in a way, I think testing will be hard on banks as simulations are hard on us as authorities. They require a lot of resources, but I would still say that especially from the proportionality point of view, that is time and money well spent. Because only through testing we will be able to find out what are the missing links, what are the sore spots, what we are still where we are not yet fully developed our capabilities. And when we find that out, then we can focus on developing those issues, and maybe we can be a bit more relaxed in other areas. So I think this is extremely important to keep in mind. So this thinking of strategic thinking of how do we achieve full operational capability, not doing certain area of planning just for the sake of doing it through testing, simulations, wargaming, thinking bank by bank. Okay, what are the most relevant risks and risk scenarios for this individual bank? How this bank will behave when it gets into trouble, and then what we need to do. And I don't think we can actually grasp these issues without testing and simulations, dry runs, exercises on part of authorities. And as I said, it will be demanding, but I think it will also guide us to use our powers, and it will guide the use of the resource requirements in a proportionate way. I think one benefit for us as resolution authorities is that in a way we are not required in a similar manner to provide like the supervisors are required to provide a supervisory program, which in a way intrinsically needs to be one size fits all, because it is a tool that is put in place to make sure that the whole banking system and each bank is supervised in a kind of equal manner. Whereas we as a resolution authorities, we have a little bit more flexibility if we think this operational way of tailoring the requirements for each individual bank, their financial structure, their business structure, their operations, etc. And we have a possibility for a bit more flexibility there. However, then this comes with the cost that we need truly to understand the situation of each bank, so that we can make sure that the plans we have prepared are executable. And then this comes to the importance of testing exercises, simulations, and on-site inspections in the longer run. I would conclude, because the topic was kind of what are the legal frameworks for these off-site tools. I think from a both practical and legal perspective, the main difference between on-site inspection and a deep dive is that the deep dive, in a way, is an extension, as Roberto was saying, it's an extension of our remote planning, and the legal basis is the power of resolution authority to obtain any information necessary from the bank. And in a way, it's a collaborative way of obtaining that information and discussing that information on the premises of the bank. And it can be very useful and powerful tool. We have used it both in SI context, and we have explored it a little bit in the LSI context as well. But then what is the difference between a OSI is that then we obtain the information, but we obtain the information independently and without, let's say, the involvement of the bank and the bank management. So it provides us another view on the bank, which is non-facilitated or non-mediated, and this is not that we would not trust the bank, but I would say that it comes back to the viewpoint or mindset of being operational, because if we need to develop arrangements, setups, playbooks that can be implemented quickly, surprisingly, and maybe in an environment that is a bit of a hostile to the bank and to the bank management under crisis, then we need to make sure that all these plans work also in such an environment. And this is something that, in a way, we can test and challenge in an off-site inspection. So I would close here my remarks and happy to answer questions.
Thank you, Jakob. Yes, indeed. For this intrusive, I can say, inspections, you have to be brave, of course. Now, there is legal justification, there is operational justification. We'll come to that, but this is the right time now to invite you to pose questions to us. And I would like to, of course, offer the same opportunity to our distant participants, wherever they may come. I hear that we have 900 participants registered for this conference, some in different time zones. For some of them, it may be late. For some of them, it may be early. Those who are connected, you are equally involved. I have this device that can assist me in selecting questions, but courtesy to you who made the effort and came to Brussels, I would like to invite you present in this room to pose questions first, and then we will see how we go. We have a couple of minutes for a couple of questions. Please be brave. Yes, I see a question in the back.
I will be the brave one to start with. So thank you very much for all the remarks, which were extremely useful to understand more about the planning and the thinking on on-site and off-site testing, if I call it like that. So I would like to understand more the interaction between the SRB and the ECB on coordination, as you have been mentioning, in relation to on-site inspections. So, for example, are you planning to time them in a coordinated way? Are you planning to exchange information maybe through Medusa or other tools? So any more thinking around how the SRB will coordinate with the ECB on on-site inspections, learning also from the ECB, as you already mentioned?
Mm-hmm. Let me start quickly with the SRB. This is our first year, so we need to learn the ways. But certainly the coordination with SSM is paramount. I presume that we would be coordinating calendars, so we do not duplicate, so that we not overlap. There is this consultation process. After this first year, that will be, we are in one half of the first year. After the first year, we will have a good opportunity to sit down, also with the SSM, to compare notes, to see how we fared, and improve the coordination. That's the general view from the SRB. I may ask Pedro now for a couple of comments on this one.
Sure. No, a pleasure. No, it's a very good question. I mean, as a matter of principle, the coordination between at level of GSTs and IRTs is very intense. So the IRTs have access to broadly the information that is dealt with by GSTs, and if, of course, the result of the of course, the RT are not part of an on-site inspection which is carried forward by the SSM, this of course, but then after the conclusion of the report is finally approved, it is, of course, this information is shared. Now, it is up a bit sometimes to see to which extent the SRB or the RTs can take advantage of the information, of the findings that are collected during an on-site inspection. Take the case of operational resilience, for instance, or ICT risk. I would see this as a major source of information for the RTs. Because this also has a bearing and an impact on the work of the RTs in terms of, some of the principles and expectations on resolvability. So I could easily see that you would leverage on that work, and eventually then the RTs can follow up on that, because the RTs can try to, on the basis of those findings, try to address, or on risk data aggregation, for instance, try to design specific dry run exercises that they then commit to or instruct the bank to carry forward to test certain capabilities. Imagine on bail-in data points, access to generation or evaluation data set. These are all sort of key aspects of resolvability that are very much data driven. So it's of course there are for sure findings in terms of the report on-site inspections, and the same is true for the work that the GSTs do also on deep dives, because also the GSTs also do deep dives which is part of the general supervisory powers of the ECB. I think it's and my experience has always been here, by the way, being 5 years in charge of a director that was in charge of several banking groups, is that information was also taken forward by the RTs, and now that we are entering a new phase on operationalization, I think the more so. So
Thank you.
This will be a case.
Can I add just one sentence? I mean, not speaking about deep dives, but speaking about on-site inspections, I would personally hope that the efforts to align are not that high, because I would expect that from an SRB perspective, on-site inspections are less frequent, right? So you do not, I would not expect that, for example, we have for a cluster for institution, for example, also a frequent and predetermined number of on-site inspections at the very beginning. So I hope that coordination efforts are low, because we should remind ourselves we are preparing from an SRB perspective for a tail event at the end. Yeah, so we are not in run the bank supervision, and therefore proportionality also in this regard should be reflected, because now thinking about ECB on-site inspection 1, SRB on-site inspection 2, and then AMLA on-site inspection 3. I mean, I really get a bit of nervous there, and that we can also really feed all that demands in a certain quality, which is also then expected. So I hope that your question is at the end, maybe in 2 years, or in 3 years, when you also went through all the institutions at first instance, is less relevant anymore.
Yes, the tail event, indeed. But we are...
I know, it's your mandate.
That's the mandate, yes. Here is a question from the audience, from the remote audience, which is short and concise, and I will try to respond that in a short and concise way. The question is this. Are the SRB OSI and the results of them feeding into the SREP process of the ECB?
No.
Quicker than I. The simple answer is no. The results feed into the resolvability assessment that is performed by the SRB. But of course, we can exchange information between the JSTs and the IRTs. Again, these acronyms.
Yes.
But joint supervisory teams, internal resolution teams. This is the working level in between our institutions. Okay, so that was the question from the remote audience. Do we have a question here? Okay, you there first, and then the second.
Okay, thank you very much for the different perspectives from the panel. I was wondering if you could comment on the use of skilled person type of reviews and the extent to which different jurisdictions might use them, and reflections on the frameworks for them as to have them sort of more flexible or more prescriptive when looking at the capabilities of firms.
I have to admit that can you explain this skilled person approach?
So the idea that either the authority or the firm would use external advisors to investigate a particular capability or topic.
Okay, thank you.
Mm-hmm.
Yes, if you want, I can answer here from the perspective of our national experience. We do not make use of external advisors in implementing the on-site inspections. We only make reference on the colleagues of the Bank of Italy, of the supervisory department specifically. So it is not in our tradition to have this kind of support, external support from the outside of the supervision and the resolution, if we will make in future inspections at national level. Thanks.
Yes.
Yes, we have pretty much the same approach. So for our own work, we would not use external consultants, at least at the moment. I think our national legislation would set also quite high bar from that. So that's another European specificity. So even if you have harmonized powers in the EU law, if it's implemented in national level, then your national constitutional administrative law impacts on that. But also for our resolution exercise, we recommend them that they, from time to time, use also external expertise to support their resolution planning work, and also specifically, we're not encouraging them specifically, but for the self-assessments that resolution LSIs need to do under the requirements from EBA guidelines and so on. We do ask that they describe to us whether they have done the self-assessment fully on their own, whether they have used external consultants, and how, and so. So in this sense, we kind of, I mean, we recommend, I'd say, wise use of external resources to the banks, but ourselves, we are a bit more restrictive on us.
And just a short point on that. We, as a matter of principle, the usage for on-site inspections is a usage across the system in terms of the staff. So imagine that you would carry an on-site inspection here to a Belgian bank, where we are here. The team would be composed of experts from different parts of, which gives us also assures independence. So you would have an expert from the Greek NCA, or from the Finnish NCA, the Spanish NCA, that would form the team together with staff from the ECB who carry forward the on-site inspection. So this is a bit, as a matter of exceptionally, and there are certain projects that might involve the usage of external consultants, as has been the case of this internal modeling project review, the TRIMS. Of course, given the scope, the complexity of this project that basically went through hundreds and hundreds of internal models by banks, you had to resort to also the support of external consultants, and this usually is done via then procurement.
Yep. Now, there's a question before I pass the mic. A short comment also from me for the testing. For example, in our SRB guidance, there are rules and recommendations about using or not using consultants, and we invite you to look into that. This is, of course, a living document that may undergo changes as we go. As time goes by and experience grow, so this is also one answer to this. And now the question here in the back of the audience, please.
Thank you. First of all, thank you very much for the insightful comments and presentations. My question goes into the direction of the proportionality issue that was raised several times within the panel. In my personal view, proportionality should not be objective per se. I understand the importance of course, being proportional and measures being requested, but we have some examples where the proportional application of rules had very bad results. If you go into what happened in Silicon Valley, for instance, there's an example of it. Of course, that we can add into supervision more than into resolution, but indeed, we need to look this proportional application of rules in a balanced way. And my question goes really in that sense, which is, how can the application, proportional application of insight inspections, of the request of the data, or all that is being discussed to banks, how can we reach the correct balance between this proportional collection of application of rules and, of course, not putting in risk or at risk resolution and resolvability of banks and not creating loopholes or unintended consequences that can come from this proportional application? Thank you.
Okay, thank you, Roberto. Before this, I'm really sorry, this had to be the last question because of time. I would like to apologize for not having more time, but definitely we are open to get questions after the conference. There's a functional mailbox that you can direct them at, and we will respond as time goes by. But this First, Roberto.
This is a very interesting question about proportionality, but we can say about simplification more in general, no? And of course, no one can disagree on simplification, basically. But what could be clear in theory becomes very difficult in practice, in particular when simplification is used in opposition of deregulation, basically, no? Now, it's quite clear that if I can do the same thing with the same result in a more efficient way with less cost, this is, of course, simplification, no doubt on that. The problem arises when I'm doing something which has certain kind of benefits or effectiveness, but high cost. Is this simplification or deregulation? Is this the right balance or not? Of course, the question is open. My personal impression is that this is not a clear simplification. And in any case, it opens a change of paradigm, which means to include in our reasoning the question of the risk appetite, because we have to balance benefits and costs. And my impression is that in the ideal trade-off between high benefits, high costs, low benefits, low costs, if we work very close to the first extreme, which means high benefits, high cost, there is room for the authorities for optimizing and simplifying and so on. But if we move to the other extreme, I would not advise for the same reason you have mentioned before. But if we want to go there, well, I think this is not in the remit of the authority, because this could influence the mandate, which is established at the level 1 regulation, political level, and so on. So we can do, but the level is not the level of the authority. This is my impression.
Yeah. Thank you. We have two more comments, and then we will have to close this panel. But please, Jaco, and then Pedro.
No, I mean, I agree with Roberto. I think I know that the discussion on simplification is going strong. But speaking here and in the SRB House as a representative of the Resolution Authority, I mean, the legislator has given me very clear mandate. My mandate is not first and foremost to deliver on political perceived competitiveness of Europe. My mandate is to deliver on being prepared to resolve any bank, minimizing the impact on financial markets, on financial stability, and protecting the taxpayer. And this is what I will do. So I think that makes it a bit easier for us as a resolution authorities because we have such a clear mandate. But on your question about proportionality, I think what makes this a bit also easier for us as a resolution authorities is that because we have this inbuilt, let's say, two-step process. So when we do the resolvability assessment, majority of the European banks are not earmarked for resolution. So we will not make detailed resolution plans for them, and we don't set detailed requirements for them. But if you have a bank that is assessed by the authorities as something that needs to be put in resolution in case of failure, then we need to make sure that all those banks, regardless of their size, can be resolved effectively. But I think what helps us is that we already have ex ante this kind of two categories of banks. I think it's much more difficult for the supervisor because you need to work with internal models, and then it's the decision of the bank to use internal model or not. And then it's much more difficult to say, is a small or medium-sized bank using internal model inherently more riskier than a big bank using internal model. But we have much more, let's say, objective criteria when it comes to resolution authorities.
Thank you. That leads us to Pedro.
Yeah, just a very small comment on this very interesting question is regarding maybe the experience on the internal models of of the ECB. This was heavily time-consuming and resource-intensive, not only for the banks but also for the ECB. And clearly, there is an assessment in terms of the intensity of the work regarding complexity and materiality of the internal models. But we cannot sacrifice also the reliability and quality of those models, because they are used for calculation of own funds. And in addition, we are also constrained sometimes. We cannot only think that it's on the supervisory full discretion to decide on the level of intensity. For instance, material changes to models are also obeyed to certain thresholds that are in an RTS by the EBA. So we are not totally free to decide whether or not we can go for a more simplified approach. So this also starts there. But just to complement and with a small maybe provocation, sometimes also the complexity would be added if, for instance, on internal models, the banks would revisit their own landscape in terms of internal models. Sometimes we wonder why banks insist on having internal models for very small portfolios of their RWA. So I think this is also a sort of a binary kind of effort, not only on the side of the Supervisory and Resolution Authority to embed in certain simplification, which clearly it is being undertaken, but I think also on the side of the banks, they should also reflect on some of the complexity that they have inherent in their operations and business models.
I hope it answered your questions. Again, if it didn't, send us the continuing questions. And
you will answer.
I'll answer. I'll answer.
Yeah, 30 seconds before closing the panel, if it's possible.
Yes.
Just one idea on the future of testing, generally speaking. What we have discussed about is the testing as it stands now. But the question is, what comes after testing? One answer could be testing again, continuous monitoring and so on. But I think another perspective is possible, which implies a change of paradigm, which is that train the ability to manage the unexpected, because all crisis managers knows that future crisis will occur on the basis of circumstances and situations which are unpredictable and unpredicted. So how can we react to that? Perhaps we can test again, of course, it's useful, but also to train ourselves, meaning banks, of course, but the authority as well, in managing what is unknown and what can happen. One idea of this is the drill, which are that kind of dry runs where there is the possibility of inserting some level of uncertainties just in the moment when the exercise is made. But there could be other possibility.
Thank you, Roberto. We're eating of the time of the coffee break. That goes on me. I apologize. Please join me in a round of applause and thank you for our panelists, Denise, Roberto, Pedro, and Jaco.
Thank you.
And researchers. It's been a real pleasure. Real pleasure. We didn't have time for the Credit Suisse question, but that's not.
And thank you very much to Radek and to all of our speakers. So we're now going to take a short break. We both planned and operationalized some coffee, and we invite you now to test it outside. The SRB Legal Conference will resume at 11:50, 10 to 12. We'll be back here at 11:50. Thank you.